What's up everybody? Welcome to the Stocks channel. My name is Cory and today we're going to look at macro technical analysis and we'll be looking at weekly, monthly, and quarterly charts of the indices. So first up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. All right. So first up, just a quick announcement. I want to thank all of you for this incredible journey. I've had a blast doing these videos, but I am going to be hanging up my hat and retiring from YouTube. I hope you all enjoyed this journey as much as I did, and I hope you got a lot of useful information from my analysis and my updates. And of course, none of that is true because it's April Fool's Day. All right, so today we'll be looking at the weekly charts, monthly charts, and quarterly charts, and this is going to be all based on what we see on the charts with absolutely no bias. And I'm going to give you very compelling reasons why you should be bullish, and I'm also going to show you some reasons why the bears still have a reason to be bearish, because there are some things on the chart we still need to be aware of. So the first thing on the weekly chart of SPX is we are clearly breaking out of the downtrend of the 2022 bear market. We simply need to get another close on the SPX weekly chart back over 41.55, and that is synonymous with the 414 level on the SPY ETF. If we get that breakout, that is another higher high, so we will have the higher lows and the higher high. And if you look at the weekly chart of the SPX, this is also going to look like a double bottom breakout if we get a clear above that level. So on the weekly chart, we have the positively sloping 20-period moving average. We have the very bullish weekly candle, which is a bullish impulse. We just simply need to now get the breakout of the higher high. Now, if you're bearish, that is a great risk level for shorting the market, but if we break that level, we're likely going all the way back up to the August highs, which is going to be between the 42 to 4300s. So you cannot stay bearish if we get the breakout, but you can remain bearish if we fail to get the breakout and get rejected from this resistance we should be approaching early next week. So yes, the market is looking a lot better this year, and we're getting more and more evidence that we could be entering a bull market, but the bulls do not have all of the evidence to just go into a buy and hold position and walk away from the market and assume it's going to go higher. I still think this is a trader's market, and you're going to have a much better time if you manage your positions and you know when to scale in and scale out. There is a very good chance, if you just look at the bear market of last year, that we are going into a trading range, which means we can really just ping pong and go absolutely nowhere into next year. And we can build out a giant trading range, just ping ponging between support and resistance and go much of nowhere. So for that reason, while I could be wrong, I think there's a good reason to be made that this is going to be the case, which means this is going to remain a trader's market. As a trader, I can utilize buying at support and selling at resistance, or shorting at resistance and covering at support. And I could actually return a profit in a trading range market that is going nowhere. If you're a buy and hold investor, it's going to be very frustrating because your investments will make no money over the years. But as a buy and hold investor, that's what you're signing up for, and that's what you need to be aware of. So in a trader's market, just be aware of these very critical resistance and support levels, and be aware of the current trend. The current trend is higher lows and higher highs, and we just need confirmation of the breakout. Now, the next thing I want you to pay attention to is that we did bounce off of the 50% retracement from the March 2020 lows to the all-time highs that we had in 2021. And that is typically all you're going to get in a bear market if you are going back into a bull market. So if we are still in a secular bull market, this would have been the low, and now we're going to rally off of this low and likely never see that low again. If we are not in a secular bull market, the price will need to come down and break below 3,500, and then we are likely going to 3,200. 3,200 would likely mark the bottom, and we would likely never go much lower than that, even though there are people out there that think it's possible to go all the way back down to the March 2020 lows. I personally do not think that is in the realm of possibility. 3,200 would be the absolute bottom if we broke down below 3,500. Now that is my opinion, and it doesn't matter whether or not you agree with me, because we can all agree if we break down below 3,500, that is bearish and we're going lower. So in the short term, you need to be aware of this being a bullish trend, and that is only going to be true while we are above this rising 20 weekly moving average, which is right around SPY levels of 400 and SPX levels of 4,000. Now quickly, I want to switch this over to the monthly chart, because if you are a bear, this is a very good reason to still be bearish, is that we are currently still below the negatively sloping monthly 20 period moving average, which is going to be that resistance right around the same levels we just saw on the weekly chart, which is right around 4150 to 4180. If the bulls cannot break above this level and we see a very sharp rejection in the month of April or the month of May, this is going to look like a giant monthly bear flag, which could easily take us down for that next leg lower to get to 3200. At a very minimum, if we didn't go to 3200, we could at least double bottom off of 3500 and then bounce from there. So now zooming out on this monthly chart, you can also see we are holding above a support trend line that goes all the way back to the 2009 lows and the March 2020 crash, and that's about where we were bouncing in October of 2022. It's not a perfect trend line and we did crash below it temporarily, but that's why it's called a crash, because you usually don't spend a lot of time below the support level. And then finally, I want to switch this over to the quarterly chart where every candle is an entire 3 months of price action, and you can see that SPY did have 2 consecutive quarters of positive price action, and we did bounce off of the 20 period moving average on the quarterly chart. Now, typically, if you go back through history, if you get 3 red quarters in a row, that tells you you're in a bear market. And then once you get 2 green quarters in a row, you are typically out of the bear market. Whether or not that holds up true is to be determined, but it's a great case to be made that the bottom could be in, and we're either going back into a bull market or going to remain in a trading range. So the most likely scenario looking at these charts is that we are either in a bull market or a sideways going nowhere trading range market, which is going to be called the kangaroo market. There is a very slim chance we are still in a bear market, so do keep that in mind. In order to get back into a bear market, we are going to need to break down through that critical support right there at 3,500, and that is still a long ways away. So be aware of resistance levels and then just get risk off as we approach resistance. So going back to the weekly chart, there is no reason to be bullish as we are approaching resistance at 41.55. My suggestion is to get risk off as we approach resistance and even possibly consider shorting the market if the conditions in your strategy tell you to. But once we break resistance, then you want to get more bullish, because then we're likely going for that next leg higher, which is going to be the August highs. So be disciplined in this market and do not remain bullish as we approach critical resistance levels. That is a very common mistake a lot of people made last year, is they're expecting some very strong bull trend to come out of this market, and we're just getting that trading range, which means you need to be disciplined. You need to be selling at resistance and only buying at support. If you're shorting the market, you need to be managing your risk at resistance and shorting only at resistance levels, and make sure you're covering at support. So I don't care which direction you're trading, I actually suggest you learn to trade in both directions, but if you're only focused on one, make sure you understand that very simple principle. So as we approach critical resistance, we need to wait and see if we're going to break above it, and then if we do, we're looking for the August highs, and if we don't, we're looking for a retracement back down to the breakout right around 4,000. Now jumping over to the weekly chart of the NDX, this is going to be those big tech companies that are absolutely crushing it right now, and you can see the big tech companies are already in a weekly bull trend of higher lows and higher highs, and we did get a very bullish breakout the last couple of weeks because we did get that clear back over to a higher high above 12,590. Now there's a good chance from here the NDX wants to go a little bit higher to test the 50% retracement of last year's bear market, which is going to be another 3% higher to get us to 13,602. If we break that level, that is a higher high from the bear market of last year, which tells us we are likely going to the next leg higher at 14,349. There are weekly gaps on this chart, as you can see, which means we are likely at some point going up there to fill those gaps, and it looks like the market wants to go do that now. So there's a good chance we're going to get a bullish summer, especially in the tech sector, and the tech sector is the majority of the S&P 500, which is likely going to push that higher as well. However, just like I said with the S&P 500, there is no reason to get bullish once we get to resistance, so you need to be considering scaling out of your long positions as we climb towards that critical resistance. You can always get back in them if we break resistance, but there's going to be a lot of sellers and a lot of bears showing up at these critical levels. Now zooming out on the NDX, you can see we are in a very powerful bull trend, because if you go from the 2009 lows all the way to the March 2020 lows and you draw a trend line, that is exactly where we bounced off of last year in 2022 and then again in 2023. So that is what gave us this very bullish weekly double bottom that we are currently breaking out of, and that's sending us to higher prices. This is very simple to see that this was a giant double bottom off of the lows. We broke out above the neckline. retested the neckline as support, hit the weekly 20 period moving average. That is a positive slope, and we had a very impulsive 3-week bounce off of that level. So that is objective analysis and following price, and price is the most important thing you need to follow, because when you're getting impulsive price action off a very critical support zone, that is telling you there is a ton of buyers in the market. So this is the real deal buying, and this is a real deal bull trend as long as we're above 12,580. And that is exactly where I would set your risk at if you're going to remain long in this market, knowing you should be locking in your profits as we approach this critical resistance above. Now let's jump over to the NDX monthly chart, because the monthly chart also gives you reason to be concerned, because price action is approaching this negatively sloping monthly 20 period moving average. That is going to be the same exact resistance I just showed you on the weekly chart. So be very cautious as we approach that level, because if we get rejected from that level, it could just be a bear market relief rally. And then we're going down for that next monthly leg lower to retest the lows or make brand new lows. There is no reason to predict whether or not we are going to get rejected from resistance. Just follow the price action. If you get in the habit of being objective and letting price do all the talking, you'll have no bias and you'll become a much better trader. If we look at the quarterly chart of the NDX, you can see we only have one green quarter on the NDX, because the higher rates did crush the tech sector, and we are just now seeing the recovery from it. But because the tech sector was so heavily crushed, it could have the most to gain on the other end of this equation. So this is a very impulsive 3-month candle, closed at the high of the quarter, and a very impulsive bounce right off of support. And there's no way you can look at that and see anything other than a very objective bounce from support. That doesn't guarantee we're going to all-time highs. And as I talked about before, there is still a good chance we just get locked in a trading range going into the next year or two of trading. This could be very frustrating, so be aware of it as a possibility, which means you should be focused on disciplined trading and not focusing so much on investing. Investing could be part of your strategy, but this is a channel surrounded about following price action and trading, and that is why we are going to focus on trading. So we looked at the SPX and the NDX, and we looked at the weekly, monthly, and quarterly charts, and they're all basically telling us the same exact thing, which that we are currently in a strong bull trend approaching very critical resistance. I'm not making any predictions on whether or not that resistance breaks, because we're going to let the price action do all of the talking. So because we're only about 3% away from critical resistance, it should not be long until we find out whether or not we are going to break above it, and then we will assess the price action in the market at that time and make a decision moving forward what's the best way to trade this market. That is exactly what we're doing each and every day on the Stocks Channel Trading Discord community, where we objectively follow price action each and every day for day trading and swing trading. If you want to come be a part of that community and get access to all of my intraday updates and analysis, you can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.